Welcome to the Kohrs Show. Today we're going to be talking about all the things that you might have missed if you didn't spend all day doom scrolling on the internet, at least the way that I do. In all reality, today was an insane day. There's been a massive seismic shift in the world of media involving both Tucker Carlson and Don Lemon, and this has led to large swings in the market. Then we'll be getting into the meme stock favorite, Bed Bath & Beyond, ticker symbol BBBY, too many B's, and now we can add another one, as in bankruptcy. And then to wrap it all up, we'll be talking about the granddaddy cryptocurrency of them all, Bitcoin, and how a lot of people think it might be going to 50,000 in the short term. So with all that being said, buckle up, smash the like button, and let's ride. Early this morning, it was announced that Tucker Carlson will be parting ways with Fox. Now, this was a really big deal. In fact, I know he was pretty popular, but I didn't realize in terms of quantifiable metrics how much of the media landscape, especially at Fox, that Tucker Carlson carries on his back. Now, for the astute viewers out there, a lot of people pointed out that this was clearly unexpected. There's many clips going around from his Friday show of last week where it seemed like he was very much planning on being back today, Monday. So obviously there's a lot of rumors and conjecture of what might have happened over the weekend. It could relate to this: Fox to pay $787.5 million to settle Dominion's defamation lawsuit. Of course, he might be caught up in that. There could be a legal reason for Fox wanting to protect themselves, or maybe he was butting heads with the head honcho. Rupert Murdoch made the decision to fire Tucker Carlson. Murdoch is said to be concerned over Carlson's coverage of January 6th, including conspiracy theories about government agents being involved. I'm sure if we give it enough time, the entire truth will eventually come out, but understand this is a very big deal. As I alluded to earlier, I didn't ever personally appreciate how much of Fox really is Tucker Carlson. Fox News had the top primetime programming across all cable news in March, with Tucker Carlson tonight grabbing the most eyeballs with an average of 3.251 million viewers. Folks, I'm in the world of content creation, and you have to understand these numbers are meteoric. In fact, Tucker Carlson's viewers double Fox's average, and if you compare to MSNBC or CNN, they're absolutely dwarfing them. I don't think any of you listening to this will be surprised by the fact of when the news broke, Fox's stock, trading under the ticker symbol FOX, absolutely vomited. In fact, by the time the market closed out on the day, it was down 3%, which roughly correlates to almost $700 million. Tucker Carlson's Fox News exit wipes out $690 million in value. That's a lot of money. That's a lot of power. This is a big problem. So not only was Fox's stock vomiting the way I do whenever I get on a roller coaster, especially one that goes backwards, but the craziness in the world of media did not stop there. Check this out. CNN anchor Don Lemon says he has been fired from the network. The news of both of these events was roughly an hour apart, and don't forget, recently BuzzFeed going bust, Stan Bongino leaving Fox. These are just to name 4 things in a series of crazy media switch-ups. If you ask me, something big is going on behind the scenes. Now I get it. That might be a little bit too conspiratorial for all my viewers, but you know what something is that we could all agree on? That Don Lemon needs to get a different word editor. I don't know if he should be using Notepad, the notes in his phone, or just a classic Word doc, but whatever he chose to use, it's absolutely insane. Look at what this dude did. I was informed this morning by my agent that I have been terminated by CNN. I am stunned. After 17 years at CNN, I would have thought that someone in management would have had the decency to tell me directly. At no time was I ever given any indication that I would not be able to continue to do the work that I have loved at the network. It is clear there are some larger issues at play. With that said, I want to thank my colleagues and the many teams I have worked with for an incredible run. They're the most talented journalists in the business, and I wish them all the best. And then obviously, because we live in the coolest simulation ever, it didn't end there. This is how CNN responded to Lemon. Don Lemon's statement about this morning's event is inaccurate. He was offered an opportunity to meet with management, but instead released a statement on Twitter. I don't know who's on the right side of the drama here, but I absolutely love it. Before we move on, 2 very quick things. I want to get your thoughts. Let me know your thoughts in a comment below on Tucker Carlson, on Don Lemon, because it all seems a little too crazy. It feels as if the media apparatus around us is collapsing before our eyes, and maybe that's wrong, but that's exactly why I want to get your thoughts. And second, shout out to today's video sponsor. I'm talking about StreetBeat. StreetBeat is a robo-advisor that allows you to buy and sell stock the way you would on any brokerage, but it has other cool capabilities, such as the fact that you could use AI, really I'm talking about ChatGPT, to generate and update and really kind of fine-tune portfolio development. It's so incredibly cool. I highly recommend that you check it out. It is in the description below, but if you want to get a free 5 to 5,000, depending on the size of your initial deposit, make sure you use the code MATT, M-A-T-T, when you sign up. It'll be on the very first page. And now that we're talking about stocks, we should probably talk about how Bed Bath & Beyond added another B, bankruptcy. Bed Bath & Beyond files for bankruptcy protection after failed turnaround efforts. Now, I must admit, it was a pretty valiant effort by the CEO, by the leadership team, even by the retail traders and investors that supported it, but it looks like it came to no avail. You could argue that the Bed Bath & Beyond story started at the beginning of 2021 when the buy button was taken away from that stock and other related stocks such as GameStop and AMC, but I want to talk about the quote-unquote start of the downfall that arguably really began in mid-August of 2022. Activist investor Ryan Cohen completes planned sale of Bed Bath & Beyond stake, stock falls 40%. Now, there's a lot more to it than just these headlines, but to give you the TLDR version, he used a bunch of retail traders as his exit liquidity. He knew that there was a certain date his filings would become public, and within the most recent quarter, the filing would show that he basically YOLO'd into a bunch of call options, so people got excited and they bought. What people didn't know is when that came out, the stock is going to go uppity, 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 and he sold his entire position into that retail enthusiasm. He used retail as exit liquidity. This is not illegal, and some would argue it's immoral, but that's from person to person to decide. And from that moment, it was never really able to find its footing. Bed Bath & Beyond shares plummet after the company warns of potential bankruptcy. That's how we started off 2023, and unfortunately, you're going to see that they fought well, but it just wasn't enough. Bed Bath & Beyond reports wider than expected loss as possible bankruptcy looms. That was almost a week after. Then Bed Bath & Beyond defaults on credit line, warns it can't pay down debts. This was followed by Bed Bath & Beyond lines up funding in a last-ditch bid to avoid bankruptcy, and surprise, surprise, it did not work. Bed Bath & Beyond again warns of bankruptcy if new stock offering doesn't pay off. It didn't pay off, and now it looks like we are weeks, maybe months away from official bankruptcy. Now, if you ask me, the Bye Bye Baby asset, the sub-brand of Bed Bath & Beyond, it'll be spun off because that is popular, but the rest of it, it'll just be siloed off and most likely sold off for parts. Now, as a very important side note, please understand that just because this is clearly going to go in the way of bankruptcy, that doesn't mean that the stock, BBBY, won't have crazy volatility. Use Revlon, ticker symbol REV, and kind of a recent example of, even though it was in the middle of bankruptcy, the stock was going haywire to the upside and the downside, and it was all based on what the bankruptcy judge decided to do or to not do. Now, I'm in no way saying that that's what Bed Bath & Beyond is going to do. In fact, it might just be incredibly boring. I have no idea. I just want you to be careful, but also don't be the person who's tricked into buying it thinking that it might somehow recover. Of course, that's possible, but we're talking about a snowball's chance in hell. Bed Bath put up a valiant fight. It gave it the old college try, but eventually it fell short, and I just don't think there's going to be much of a turnaround. On the flip side, there is one particular thing that there's a lot more talk about recently, and it's because people are getting excited about it going to the upside, and that is Bitcoin. Very quickly, for those of you who don't know, these halving events are a way of curbing supply. Basically, the reward for updating the ledger, for security and authenticity, it gets cut in half, and it happens every roughly 4 years. And now for the potential money-making part of it, people have noticed over the past 3 halvings that right after the halving completes, it seems as if Bitcoin rallies. Now, obviously, there's no guarantee of this happening in the future, but if the past 3 halvings themselves are any indication of what's about to come, things might get pretty exciting within the next year. With respect to the overall equities market, surprise, surprise, nothing happened. Another day of chop. We went violently upward and downward and ended the day at pretty much nothing, which has been the name of the game for the entire month of April. Pretty much all of the big traders are sitting on their hands waiting for the Fed to make decisions about monetary policy, and at this point, we're also waiting for the earnings from mega companies such as Apple, Microsoft, Amazon, Google, and all those tech giants. Speaking of which, if If you're watching this in a timely manner, which you should, make sure you have your notifications on and click on that bell and switch it to all instead of personalized, so you're actually getting notifications when we're posting any of these videos. So basically, I hope you're getting this in a timely manner. There's mega earnings this week. In fact, based on market cap, 40% of the entire S&P 500 is reporting this week. If you're watching this, Microsoft, Alphabet, Visa, McDonald's, GMG, they're coming up in the very short term. After that, we have Meta, we have Roku, we have American Airlines, we have Amazon, we have Intel, we have Snapchat, we have Caterpillar. Huge companies, just to name a few. So feel free to check out @eWhispers on Twitter or just screenshot this. But I just want you to know that these are big companies all reporting, and if they generally sound positive, yeah, this could push this market to the upside. But if they sound not so bueno, well, then they might have an adverse effect. So I just want you to be prepared. Recently, it's been a lot of chop, not really going anywhere, but depending on how all of this falls, we might finally get some nice trend. That's it for today's episode of the Matt Kohrs Show. I truly appreciate your time. Don't forget to leave your thoughts and opinions in a comment below. I always love engaging with all of you. I hope you have a beautiful day. I'll catch you in the next one.